All right, we're going to talk more. Thanks, Mike. Let's talk more about the banking turmoil and how regulators are watching this situation from Europe, from Washington to Europe. Joining us is Dino, former executive at the New York Federal Reserve, current special advisor to the CEO at CLS Bank International. Dino, I've had people texting me that the European banks never found religion after the financial crisis to the same extent that American banks did.
Yeah, I think to some degree that's true because in the U.S., right, we were the epicenter of the crisis, and so the U.S. regulators, sort of, did as much as they could to correct, the perceived problems that led to the crisis. I think in Europe they sort of said, well, this was a U.S. crisis. Our banks weren't really. We were kind of on the sidelines of that, so we don't need to do as much. That was kind of like the view that that I heard in speaking to policymakers in Europe at the time, and so I think that's probably we're now seeing some of the results of that, unfortunately.
What didn't they do, and why did, if you look on paper at capital ratios, why do they look better in Europe? Versus we were just trying to drill down on that. Yeah,
you were mentioning some of this before about just how the calculations are done and sort of the robustness of the accounting standards. There are some differences, but I mean, but in this case, I mean, there's a lot of other things going on. If I could just tick off a couple of them. So this decision to wipe out the bondholders of these so-called AT1 bonds of Credit Suisse, that's something that's going to be felt because, in fact, this CDS blowout that you're seeing probably is a contagion from this decision that now the investors that own these kinds of bonds for other banks are saying, okay, well, is my bond at risk and is it priced correctly? So, how do you hedge some of these things? You hedge it by selling CDS spreads. So that's kind of one issue. Another issue is
right. I didn't even think of the hedging aspect.
Yeah, another issue is just that how many rate hikes have we had this week? I mean, I've lost count.
A lot.
This is in the middle of a banking crisis. In U.S. and Europe, and we've got now. You understand why the central banks are doing this because they're focused on inflation. But it's coming. The news cycle is kind of odd that you're seeing both these banking stresses, and you're seeing these interest rate increases. The third thing I want to mention is what's happened to the Fed's discount window. The borrowing has been enormous the last 2 weeks. It's huge, about 150 billion or thereabouts, maybe a little bit more. That should not be happening because there's a lot of reserves in the system. The fact that they're not reaching all the banks is because they're being hoarded. Now, if reserves are being hoarded, that also tells you that the banks are not lending very much. So this is going to seep through into the economy over coming weeks and months.
So if Jay Powell says that the credit crunch could be as much as a 50 basis point hike, what would you put it at?
I mean, look, it's hard to know. Is it 50? Is it 75? Is it, who knows? But the thing is, it is a positive amount, right? And the Fed's decision to go 25 is just kind of piling on to whatever it was. And so, yeah, we're probably going to have a slowdown. It's in the pipeline now. And, so this, the government bond yields that you were just talking about is a reflection of that. The market's looking ahead. They're saying we are going to have a slowdown. It's going to be meaningful in the next couple of quarters. And, the Fed's going to have to react. Now, is it going to react in 3 months, 6 months? It's hard to know. But, that is what we're looking for.
I mean, it seems like one mistake can lead into another mistake. So they're still stung from the transitory incident.
Yes.
We've mentioned, a couple people mentioned the Trichet, being very proud of his quarter-point rise only a month later to have to really, almost with his tail between his legs, come back to cut. Is that going to happen? The Fed wanted to be so firm in its resolve to fight inflation that they really were sort of whistling past the graveyard when this was.
I mean, the Trichet episode was egregious. I don't want to compare it to that.
But is it possible it comes to that, and we look back at this historically and say, oh my God, they should have never raised that last 25 basis points?
Hopefully, to the point you were making before, hopefully that doesn't happen because that would mean that the next few weeks and months would be really
right. Difficult. I don't want to see what
none of us want to see that. So hopefully it won't come to that.